Hi everyone, welcome back to Corporate Decoder. Today, we're diving into a filing from Livento Group, and let's just say their financial moves are a bit like a roller coaster, hopefully not the kind that crashes. Before we get started, if you enjoy getting the lowdown on company filings without the jargon, make sure to subscribe. We've also got a Discord community linked in the description below, so come join the conversation. Let's kick things off with the basics. This is a Form 8K filing which companies use to report important events to the Securities and Exchange Commission, or SEC. Think of it as a corporate breaking news report. The date of this report is July 2nd, 2025, which means the event discussed happened around that time. So who is Livento Group? Well, they're a Nevada-based company. It's important to know who we're talking about before we dig into the details. Now let's look at what kind of securities they have registered. They have common stock, and it's trading on the OTC Pink market under the symbol NEGN. The OTC Pink market is generally for smaller companies, so keep that in mind. Here's the heart of the matter, item 1101, which discusses a material definitive agreement. That basically means they entered into a significant agreement. On June 30th, 2025, Livento Group made a financing agreement with Vanquish Funding Documents Inc. That's a fancy way of saying they borrowed money from them. The amount they borrowed was $75,600. The interest rate on this loan is 22% per year. Translation, that is kind of high interest, meaning it will be expensive for them to pay back. The loan is due on April 15th, 2026, so they have less than a year to pay it back. Here's where things get interesting. If they can't repay the loan, Vanquish Funding can convert the debt into Livento Group's common shares. It's like turning the loan into ownership of the company. The conversion price is at a 35% discount to the lowest price of the stock in the 10 days before the conversion date. That means Vanquish Funding could get a lot of shares for cheap if the stock price drops. So let's try to make sense of this all. Livento Group needed money and got a loan with a really high interest. If they can't pay it back, the lender can convert the debt to stock at a discount. This might be good news for Livento Group because it allows them to take the loan without having to have the money at the time. But if the company can't pay it back, this could dilute existing shareholders. The report is signed by David Steinbrook, the president of Livento Group. I'll narrate that's our breakdown of Livento Group's latest filing. It's a relatively straightforward filing, but the implications could be significant. The high interest loan and potential for debt conversion are definitely things to watch. From what you've seen, Livento Group is betting on their future value to justify the financing agreement. This move is risky, but potentially rewarding if their strategy pays off. The high interest rates highlights a potential weakness, their ability to secure capital on better terms. This loan structure, relying on debt conversion, could substantially alter the company's ownership. What do you think about these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also, don't forget to check out the Discord in the description. Thanks for watching. See you next time.